What's going on, traders? Welcome to the SPAC Attack. Let's get it started. Dun, 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 dun. What's up? What's up? How we doing out there, my Zinger Nation? Welcome to the SPAC Attack, where we talk everything SPACs. And if you're a SPAC fan, definitely give me a thumbs up to get it started. Let's bring on my man to the show, the brains. And as you see the cars behind me, we're going to start our engines today. Let's bring in Chris.
Hey, what's going on, Mitch? How we doing today?
What's going on, man, is I'm ready to power shift into second and get into our interview already. As you see behind me, I love cars. I honestly don't have a stick vehicle anymore, and I miss doing that. I don't know about you, Chris, but there's nothing like a first to second pull, power shift into second. Boom, you feel that tranny just hit the back. You know you got it right in lock. I don't know about you. I've done a couple of 11-second passes, so I miss going fast. I got to say, I do.
Well, it looks like today's interview is going to be right up your alley then, because we're going to talk performance auto parts with Holley, an iconic company that's been around for decades that chose a SPAC to go public. So super excited about that interview. We're going to find out, why they went public now and why they chose the SPAC route. And then also what's ahead for them, with their direct to consumer, omni-channel, and also maybe talk, how do EVs play into their growth ahead? So super excited.
Yep, definitely. We're going to get into that. I know we got some headlines like always, and there's a big one out there, guys. So stay tuned, guys. We're going to get to it. Like always, guys, definitely welcome to the SPAC Attack. And let's go ahead and let's go back to taking us back to the headlines.
All right, guys. Yeah, so headlines today. Up first, we have General Motors announcing the launch of Ultium Charge 360. This is their new platform that's going to integrate charging networks on vehicle mobile apps and other products. So they're collaborating with 7 charging network companies with over 60,000 charging plugs then available to their customers. Those partners include Blink Charging, ChargePoint Holdings, EV Connect, Flow, Greenlots, SemaConnect, and EV Go. So we, of course, know that Blink Charging is public, BLNK, ChargePoint Holdings public, CHPT, which I do own shares of, went public via SPAC. And then EV Go is going public with the SPAC Climate Change Crisis Real Impact 1 Acquisition Corp, ticker CLII. That's quite the name for that SPAC. But so shares yesterday of ChargePoint we're up 5% on the news, and shares of CLII up 8% on the news. So it's important to note, too, in that GM deal that EV Go and GM launched the first Ultium-ready fast chargers recently with a goal of 500 fast charging stalls live by the end of 2021. Their partnership includes plans for 2,700 fast chargers by the year 2025, with each site having an average of 4 chargers per site. So CLII, getting the love yesterday. Shares are down today. But of the companies mentioned in the GM deal, EV Go was highlighted more than any of the other companies. So they could be the biggest winner from this GM charging deal as General Motors looks to, provide charging infrastructure for their customers as they shift to all electric vehicles in the future. Then we have Clove, so Clover Health, CLOV, announcing they will report first quarter earnings on May 17th. This has been a hot mover over the past couple days. It was a short squeeze rumored candidate, a couple weeks ago. Shares have been, moving. We're over 11 today. This is one that traded under 10 for quite a while. That earnings date could be a major catalyst to watch. If they report any new deals with any of these healthcare providers, if they update on, members, we could see a nice boost. But on the flip side, if they don't really get into anything new, you could see shareholders lose interest and, sell out. So keep an eye out on CLOV. That's a couple weeks away still. We have PSAC and VLDR. So Faraday Future selecting Velodyne as the exclusive LiDAR supplier for their flagship FF91 luxury electric vehicle. Remember, we had Faraday Future on the show, those, awesome looking cars with the huge, interior. So keep an eye out, as we talk, these LiDAR companies, they need to get deals with vehicle companies. And here you have Faraday selecting Velodyne. We have NSTB, Northern Star, their merging partner, Apex Clearing, announcing first quarter results yesterday. So net revenue up 98% year over year, net income up 414% year over year. Total customer accounts grew 85% year over year, and then customer trades increased 183%. They ended the quarter with 14.4 million accounts that they, help manage from the back end. So again, Apex Clearing is one of those thing behind the thing companies powering some of these brokers and their customers, both stocks and crypto. So keep an eye out on this one. That was a pretty good report from the company yesterday. Then we turn to ARK Funds. So ARK, in their daily email announcing they bought more shares of CMIIU. We talked about that on the show yesterday. Remember that SPAC deal. ARK Funds actually was part of the PIPE along with Illumina and Novartis. So it looks like now either, showing that PIPE deal on ARKG's holdings or buying additional shares. So keep an eye out on this one. This is Soma Logic. And then also ARK buying 506,397 shares of Gleo, GLEO, which announced their SPAC deal yesterday with Target Shapeways. This is a 3D printing, digital manufacturing company. They do have a partnership with Desktop Metal. So important to note here that ARK Funds has been active buying 3D printing companies. Desktop Metal, ticker ONE, which is merging with Markforged, SPFR, and then now Gleo. So she could be trying to diversify and take positions in all of them. We saw that with some of the electrical vertical takeoff vehicles where she bought stakes in several of them. So we'll see if she keeps all these positions, but a nice entry point here for Gleo, and we'll see if more shares get picked up today. And one of the movers yesterday, we had MUDS, MUDS, up 6%, hitting a new all-time high, closed at 1789. So we talked about this one on the show yesterday. MUDS seeing, a big movement here, tops with their NFTs and people realizing the brand recognition of the cards, the growth of sports cards, and then also the NFT platform that they're building. We talked about this on the first day it was announced. Shares hit a high of 1163. We, recommended this one on day one as a long-term play, and it is now up 50% from the deal announcement day. So definitely liking MUDS going forward. But again, already a 50% gain, even if you bought in on the highs of that first day announcement. We have THCB announcing that approval votes needed at the May 10th meeting will be reduced from 65% to a majority of shares outstanding. So this is one that struggled to get through on that extension vote. And it looks like they found a way to, lower the number of shares needed to vote to get the deal approved. So they're going to vote later on this summer, probably May or June. But it looks like now, based on those new requirements, it will pass. So THCB had a nice move, up 6% after hours yesterday, and up again today. And then STPK approved the merger with STEM. We said that on the show yesterday. Looks like they will make the changeover today, and we could see shares trading as STEM as early as today. So new ticker will be STEM. And then we have one rumor out there, no tickers involved, but Israeli clean tech company Tippa, which is compostable, flexible packaging, considering a SPAC merger, 500 million to 600 million valuation. This is from Calculus, which has been pretty spot on with some of these Israeli company rumors. So keep an eye out on this one. It did just raise $120 million valuation in February. So doing a deal at 500 million, you might see some criticism out there for, such a large increase in just a couple months. And then we do have one new SPAC IPO today. So for the first time in several weeks, we're going to see a new SPAC hit the market. This will be ticker BSKYU, trading as units. This is Big Sky, $300 million raised, targeting internet, retail, and direct-to-consumer. Units will include a quarter of a warrant. This includes the founder of Zulily, who was also a chairman at Chewy. And then the team also includes executives from Allbirds, Stitch Fix, Walmart, and Ulta Beauty. So again, the first new SPAC to hit the market in 2 weeks. So definitely interested to see if this one can trade over $10 or if we'll see it below there. And then we do have the merger vote today for BSPR, and then earnings heating up. The May schedule is looking big for a lot of these former SPACs. So definitely keep an eye out. But Mitch, what do you think? We're getting a new IPO today. We talked about this, right? How there hadn't been a lot of new IPOs after the SEC, looking to change the way warrants are reclassified. But here we are, on Thursday, we're finally seeing one hit the market. So what do you think? Do you think we trade over $10 today, or, do you think this one drops?
Yeah, one of the things that I noticed is that, I don't know about you, Chris, but I'm like, can we hold on a little bit more? I don't want to see too much rush the market. I don't know about you, but I am focused on the demand coming back versus the supply. There's always the equilibrium, right? And so one of the things I'm noticing, some demand come back, because if you look at some of the SPAC charts, and we're going to be talking about that later today, some of the top movers, you're going to see that there's some big volume bars showing up. And what does that show? That maybe there's some big buyers trying to step up and get that bottom look. And so I'm going to definitely pay attention these next couple of weeks to see if we can continue that trend in getting those big volume bars to showing up at those bottom looks. So, hey, there's a lot of them out there that are starting to get some moves. I know some people think that some of them are just short squeeze. I think what you're really starting to see is some bigger investors really starting to understand what Chris and I talk about a lot of the times is the fifth wave of SPAC, which is after, let's say, de-SPAC, and you really start focusing on the valuation. You focus on earnings. We talked about a stock today that reported earnings. You have to really start paying attention to that so you can see how their earnings and their actual bottom line is matching their projections looking forward. So definitely let's pay attention to that. Moving on.
Yeah, of course. Excellent point on earnings. Mitch, you've been saying that with these de-SPACs, right? So I'm excited because, I look at our calendar, and in May we've got Skills, MP Materials, DraftKings, and then we've got a couple questionable ones, right? We've got Nikola, who might not have anything to really report, right? Because they're still trying to work on all that stuff. And then we have Clover Health, which Clover Health, the last time they reported, their guidance was actually down from their original investor presentation. That kind of started, sending these shares down. And now it's been a short squeeze candidate and people, getting interest again. But, are they going to be disappointed if the company, turns in another quarter where we see minimal growth and, lowered guidance going forward? So, a lot of things to watch. I know I'll be tuning in for those earnings and trying to get some recaps, both for the show and for articles on benzinga.com. So stay tuned.
All right, guys, I want to say some shout outs to everyone in the chat. So if you're new to the show, definitely say hello. That's what we like to do here. We want to recognize you out there. So we love our loyal viewers, like let's say Carl out there. Of course, Sue in the house, Elite Trading coming through. Love it. Love it. We're definitely going to be paying attention. Where's the SPAC Attack crew? Let me know, guys. Say hello in the chat. One thing I wanted to do, Chris, and before we start our engines and get into the interview today, is talk a little bit about some enthusiasm that really gets behind vehicles and that motoring lifestyle. I have a video here from the company that we can go ahead and tune in before we start our interview today. There you guys have it. That is who Holley is. And I know if you guys have had some enthusiasm for cars before, I know I have. I still to this day, I'm happy about it because it really got my education started in kind of the stock market. But I sold my 1999 Ford Mustang Cobra. And I still to this day, like I've mentioned to Chris, I miss that drive, that power shift into second. There's really nothing like it. So I'm excited to get into our interview today. As you can see behind me, I love their investor presentation. I was just looking at the cars. There's this one where you see like the drifting Mustangs, and they got even the Fox body there for us older fans that love the Fox bodies. I used to have a friend that used to have like 5.50s. So definitely excited to get into our interview. Chris, let's go ahead and bring on our guest.
All right, guys, super excited. Again, another exclusive interview here on SPAC Attack. So joining us on the show, we have Tomlinson, the president and CEO of Holley, and Matthew Rubel, the CEO of Empower. So Holley is going public with Empower in a SPAC merger. That ticker is EMPW. Welcome to the show, gentlemen.
Good morning.
Great to be with
morning.
you. No drifting allowed in this conversation. So we're going to get straight at it.
Nice. You got it.
I'm sure one or two of you have done a couple power shifts in your time. So
most definitely.
Well, we don't call Tom the CEO as in the chief executive officer. We call him the chief enthusiast officer. So
I like that.
It's a company by enthusiasts for enthusiasts, and Tom is the chief of them all.
Definitely. Let's go ahead and let's get into our questions. I'll let Chris ask some, and I'll be back with some of my own.
All right, guys, going to try to split up the questions here, but feel free to jump in, if there's anything you want to highlight on a particular question. So, I'm going to start with Tom here. SPAC Attack, we're all about SPACs. So why the decision to go public with a SPAC, and was a traditional IPO consideration?
So we were at a natural stage for us where we were getting ready to go out in the market and look for financing, really to support the next phase of our growth. And so we were working with an investment banking group, and really, this is not something we do every day. So that was our introduction to the SPAC vehicle. And as we learned more and more about it, it seemed like a very efficient way to do an IPO. It also allows us to get out of this cycle every few years as a PE sponsored company of going out and looking for a new sponsor. So really excited about it. Excited about partnering with Empower, given their expertise on the consumer digital side. Also expertise with public companies. So it became a natural for us after we looked at it a little bit.
Perfect. And then I turn to you, Matthew. You've got a SPAC, and we've got thousands of private companies out there. So, I'm sure you looked at more than one, but you found Holley. So what is it that you know, really saw in Holley that set them apart and you chose to use the SPAC to take them public here?
Well, you're right. We came out on October 7th and had a very robust pipeline because we had positioned ourselves to provide value with, you know, the consumer, and through digital, through branding, and through a great board and advisory team. But Holley stood out, and it stood out for a few core reasons. Number one, there's an enthusiast market of 15 million people here who are passionate about their cars. And Holley was positioned in a $34 billion marketplace as the leader, and it was a highly fragmented marketplace. They showed Tom had built a team which had 22% CAGR over a 10-year time period, pretty darn good record for a CEO. And they owned their consumer. They were just getting into digital, where it was growing over 40%, but they were an innovation machine with 135 engineers that were driving innovation, which drove organic growth. Plus, they were an acquisition machine. So they were able to do that, and the free cash flow and the cash flow were superior. So we have strong margins, strong cash flow, loyal consumer base, great management team, you know, the chief enthusiast officer of a sector. It would be hard to say no.
Awesome. So, you know, Tom, I know some people watching are probably familiar with Holley and, you know, all the brands included here and that performance auto market. But for those who are not familiar with Holley, just give us kind of a brief background of, you know, what the company is all about here.
Well, so we make products, we design, engineer, manufacture products for enthusiasts who just absolutely love their cars and trucks. And we interact with them in a variety of ways. We sell directly to them. We're very focused on our consumer, and that's been a big part of the company's renaissance here over the last 10 years or so. These are parts that products that consumers use to modify their vehicles to improve their performance. Their purchase is a passion for our consumers, and the cars and trucks that they modify are cherished possessions. So it's very, very much a business that's around enthusiasm and the love of automobiles.
Perfect. And then, you know, it looks like very strong growth during the pandemic here. So, you know, Matthew, you had a chance to dive in, you know, and see Holley's financials, you know, from the past and from the future. So, you know, was this year's growth that Holley saw, was that really a key here, you know, in getting a deal done, you know, with this company at that time?
Well, their growth over time, I mean, one of the things that we looked at was not just this year's growth, because mapping this year's consumer growth is, you know, there's ups, there's downs for everybody that are a little bit abnormal. But what we saw over the 10-year time period was that there was about a 10% growth in organic. So therefore, the way they priced, the way they innovated, and the way they really were looking to where the consumer wanted to go within these great iconic brands, they were able to unlock that. And then they had the acquisitive growth. So to me, it was the combination of those in a fragmented marketplace. The fact that it did well during the pandemic, you know, was a great understanding of what people do with their passion time. But we believe that the way people go back to work here is that while people will go back, obviously, to offices and to places of work, you know, it'll be 4 days a week. It'll be 5, some cases. It may, you know, people will have much more flexible work schedules and will continue to work on their passion. So this is a real company with real consumers making a really cool product that is continuing to grow.
Awesome. So, you know, Tom, I just mentioned, you know, growth during the pandemic, but it looks like Holley, you know, has put this omni-channel approach into action to capture, you know, growth from retail, from direct to consumer that, you know, is helping during the pandemic, but also setting the company up for post-pandemic. So can you talk about, you know, how Holley can maintain this momentum right now going forward, you know, out of the pandemic?
Sure. So from our perspective, what drives our organic growth is innovation. So, we do have 135 plus engineers that are focused on, designing products that are very exciting to our consumers. And, that's a big part of our focus. We start with what the consumers want. We start with the vehicles that they love. And then we look for opportunities to really help them have a complete journey to modify these vehicles. So really, starting with the consumer, innovation, developing the products that they love, and then also we reach our consumers, where they are today. That's a lot to a great extent online. And but we also have experiential events. We recently did our Holley LS Fest West out in Las Vegas. Great event. We had tremendous participation. The events have grown every year, and that's all part of continuing to build these relationships. And then consumers can purchase our products wherever they choose to shop. We love to sell them direct. That's our fastest growing channel. It's our highest margin channel. But for enthusiasts that are more comfortable for one reason or another, or have relationships with our numerous resellers, we also support them. We have a lot of good reseller partners out there, and they're growing with us.
Awesome. So Tom, one of the things that stuck out to me is this from the company. It's, built by enthusiasts for enthusiasts. So why is that so important here in such a loyal market, with repeat customer driven sales?
Well, I think, the number one thing is we're authentic. And the reason we're authentic is because our business is a magnet for performance enthusiasts. They come to us no matter what their chosen profession is. So we literally are comprised of enthusiasts from the shop floor to the executive suite. We understand our enthusiasts, and it's because we're out there doing it with them. I'm out in the garage working on my vehicles every week. And, it's been a lifelong passion for me. It has been for many of our associates. And, I think that our consumers see that, we're real, we're out there doing it with them. It's obvious in the way we live. We are diehard automotive enthusiasts.
Perfect. So I want to turn a little to M&A, and ask both of you guys here. So Matthew, you mentioned it, in those opening remarks of, Holley being very opportunistic in M&A. So, as you explore doing this deal, is that something we're going to continue to see then is, Holley, complete some mergers and acquisitions? And was that part of the logic here in getting a SPAC deal done for the company?
It absolutely was. I mean, in a fragmented marketplace where you've got a business of scale that has built out an infrastructure that can both build that innovation machine, and then you can add that innovation to some of these smaller companies, that are really, great providers in a specific category for a specific type of vehicle. We'll continue to do that. And Tom can talk a little bit about it, but we just acquired AEM. We have 2 acquisitions that were done last year, but AEM, we just announced really last week. So after we had announced, the merger, we still were working on acquisitions. And we have, as you can see here, an incredibly robust pipeline. Tom and I were actually talking this morning. Our issue isn't, are there things to buy? It's about choosing what are the right things to buy, for us. So we have a lineup of things that we can do it. And also the other thing I think it's important to say is that we're able to buy them at an effective multiple, which will be accretive on the buy-in. But then also the way in which we operate, we can drive growth, we can drive operational synergies, which means that basically we can buy them down as well, so that they're even more accretive than that which we buy them at. So Tom has, with his team, developed a very good model there, and we're just gonna, work with him, work with the partner that they have had, Sentinel, with MidOcean, to continue to have a very robust and thoughtful pipeline.
Yeah, and then Tom, if you want to follow up here on on M&A opportunities and maybe what it is that Holley is looking for, whether to, add some adjacent markets or, increase that direct to consumer portfolio going forward.
Sure. We look at acquisition targets through the eyes of our consumers. So we're looking for brands and products that are very, very appealing to our consumers. And our vision is to offer them a very complete journey. So if you're a fan of Fox Body Mustangs, I think Mitch mentioned them at the beginning of the program. We want someone who loves Fox Bodies to be able to do all of the modifications to the to that platform, to that car, without having to send them to any of our competitors. So there are product categories that we don't cover today, and so we can acquire businesses that allow us to add those product categories in, and then we can also apply those product categories to the vehicles that other consumers love. We can also go out and acquire businesses that have focused on specific categories or platforms, rather, vehicle platforms where we don't have a lot of presence today. Our presence today is mostly in domestic muscle cars, trucks, and then we have VW, Porsche, Audi, and BMW. Japanese cars would be an example where there are a large group of enthusiasts that are very, very passionate about those vehicles. And that's one of the reasons why we were so excited about AEM. AEM is just an iconic brand, and the enthusiasts that are most familiar with it over the years literally are sport compact and import enthusiasts. So it's exciting to us to be able to welcome more enthusiasts into our fold, and then be able to leverage the infrastructure we're building in terms of DTC, in terms of the digital outreach to our consumers. So those are just some of the things that factor in. Obviously, we love being able to leverage down our multiple and exponentially grow the value of our company through synergies. We've been very successful with doing that over the years. $35 million of synergies since 2014, which represents more than 50% of the acquired EBITDA. So we certainly are car enthusiasts. We love cars. We love the business. But it's also exciting to us to be able to leverage our value through synergies. One of the things we always do when we acquire businesses is invest in new product, because we know that's what gets our consumers excited and drives our organic growth.
Awesome. And then, one of the slides that stuck out to me was the one that shows the performance auto aftermarket, being massive and consistently growing. So 6.5% compounded annual growth over an 18-year period. So, Matthew, as you look to get this deal done, was this growth of the market a key, with Holley being a dominant player in it, but also just a massive market, that's still, in the growth stages?
Yeah, you're spot on. And that is that, it's a large market that is consistently growing. And to find a market, one of our things at Empower was we wanted to find marketplaces that grew at or above the average. Check, does that. We wanted to find players that were number one or two in their marketplace. Check, we found number one. And to find ones where they were going through a transformation to the more modern ways of connecting with consumers. And the digital business is in a nascent state, leadership state within its category, but still based on, the consumer space, there's a lot of room to add new ideas to it. And one of the things Tom also mentioned was, the Holley LS Fest that took place at the, Las Vegas Motor Speedway this past weekend, where Tom, took Graham and myself out there. No, we didn't. I didn't go drifting in a car, but the number of people, I think they had, I don't know, Tom, if you got the final count yet, but over 20,000 people, showing up to an event that, where they could share the passion and love of their cars. And so a marketplace that's growing, the company that's dominant, the ability to acquire it, to innovate it, and to grow at a pace that is at least double the rate of that marketplace, we believe is a reason to invest.
Awesome. So, Tom, I look at the presentation and we have, the forward-looking financial looks like 12.8% compounded annual growth from 2019 to 2022. So I guess my big question is, how does Holley get there, and how much potential M&A is priced into those projections, if any at all?
So let's start with the M&A. We didn't include any future M&A in those numbers. We wanted to see the organic case. We wanted potential investors to be able to see the organic, the organic case. In terms of how do we get there, really it's very much the strategy that we've developed and refined over the last decade or so. And that's a focus on innovative new product. We launch thousands of products every year, and then we're super excited about grooving and polishing the way we reach our enthusiast consumers. And we've been learning as we go, and continually getting better. Growing our SEO. Learning more about very effective SEM. We've got a content, an owned content strategy that we really launched in September of 2020. It's already showing results from a session standpoint on the website. So we're super excited about all that. And, we're just, though, getting to the point where we've got the data, we've got it in a centralized location, and, we'll be able to start targeting our enthusiasts. And so we think, that'll supercharge the business. I love that image you just had up a minute ago, the Ram truck with, Motor Life is this one of the key ways that we're bringing, consumers to the website to learn, for entertainment, but also then to have the ability to buy the products they need for the vehicles they love right on our website.
Perfect. So it looks like I'm going to pass off to Mitch here for some questions. I'll just say, it looks like he's going to ask about, millennials and Gen Z. That was something that stuck out for me. We use that M word sometimes, myself being a millennial, but, it looks like Holley saw, some strong growth in the millennial and Gen Z segment. So I'll pass off to Mitch here, though, for some more questions.
All right, guys, my turn. I've been excited to get to it. So one of the things that I've been noticing is that, of course, we've had this kind of new generational move really shifting into EV, right? Yeah. And so that's one of the biggest trends that I can see going into, let's say, the next 20 years or something like that, really long term. But right now, that's definitely a trend that I'm seeing move into. So how are you guys positioned in the EV market to go ahead and capitalize here?
So we're uniquely positioned, and really we can look at it a couple different ways. We see the opportunity in a couple different categories. We mentioned the fact that we focused on vehicle platforms that consumers love. We do that today, and from our perspective, adding products for Tesla is not really that much different from supporting Camaro or Mustang, whatever the case, whatever the vehicle a consumer is passionate about. Yes, a lot of the products are a little bit different, but we have a lot of electronic expertise. And really, over the last dozen years, we've developed an incredible amount of expertise in electronic controls. And so that allows us to get into the systems inside these vehicles. Today, we've got a monitor up and working, a prototype monitor up and working with a Tesla Model 3. And then the other area where we see opportunities is just there's a lot of consumer interest today. We see this growing to convert gasoline-powered vehicles, ICE vehicles, to electric power. And we've got a project, have had a project. It's up and running now. We converted a pickup truck to electric power. We're learning from that, taking data off of it, starting to build our product programs around that. And then AEM, our recent acquisition, also has some electronic control products for EV conversions. We're really excited now about our combined capability and leveraging that to launch products more quickly. And, I would say I noticed maybe 4 years ago or so videos all over the internet about Tesla Model S performance cars just racing and beating everything in the world, Lamborghinis, Cobras, Ferraris, et cetera, et cetera. And I thought, well, you know what? I got to check this out. I mean, I've been an enthusiast all my life, and this new technology comes along, and wow, these things seem fast. So I bought a Tesla Model 3 Performance. It's been my daily driver now for 2 years, and we're actively developing products for the Tesla. And I've got prototype parts on the car now that I'm driving every day, and we'll start to launch those products this year. So we're super excited about that space. We think it grows our overall market, and we think we're uniquely positioned, especially with our electronic expertise, to really bring something to the table here for our consumers.
Hey, it looks like you guys are not getting left behind with the new generation move here. And we're going to see more and more. One of the things that we've been seeing is President Biden talking about more credits and things like that. So I can think that can even further accelerate this trend. And it looks like you guys are right on top of it. The next thing I'm going to go to a question to Matthew here. So Matthew, I'm going to put up here from the investor deck, and I'm sure this played into your decision making here, but can you explain to me why Holley seems so attractive at that 10.3 times the X for future EBITDA here in 2021 compared to, let's say, a closer company? I would compare Fox here at that 27.8. Can you explain to us how that came into your decision making and why you think Holley is so attractive at this value?
Well, Holley's margins are at or above the margins of many of the companies on this page, and the growth rate is at or above many of the companies that are on this page. So the only area, we have a little more debt, than some of the others. But other than that, we are superior in performance. And so we believe there's room for tremendous multiple expansion. The street just has to get used to the fact that we're a new, fresh company out there. And Tom and his team are, doing a great job. We see no, let up in the performance or the numbers that we've put forward. They're very solid, and we're on track for our late June de-SPACing, and really see this as or actually mid-June de-SPACing and merger just after that. But we're really in good shape. And listen, if you look at Holley against Fox Factory and look at the multiple of Fox Factory versus Holley, you can basically get a company that's growing at the same rate with many of the same enthusiast type traits and attributes, but at half the EBITDA multiple. And so there's so much upside here. It's from our perspective a great investment. It's something where I didn't take on the chairman's role because this is a transaction. I took on it because it's a great team, a great investment, and got a great long-term horizon.
All right, I'll ask a follow up here for Tom, and I'll actually piggyback here off of Matthew. To me, I always look at that number, and we're talking here for that gross margin, and I always look for that above that 35%. For me, that's just the sweet spot when you start seeing that good number really trickle down. And here you're seeing 44% compared to, let's say, the Fox right next to it at that 33%. Tom, how do you guys achieve this here in the gross margins?
So obviously, our products, our brands are premium brands in the marketplace. And so certainly we have pricing power in the marketplace. We also watch our costs closely. We've been able to generate a lot of synergies with our acquisitions to even when their margins are lower than ours, bring them up to support our overall margins. And everything we do is focused on the enthusiast consumer. And one of the challenges with Fox is a large part of their business is OE. And when I go back in our past, we did some OE business, and we know that can be very challenging from a margin standpoint, because the original equipment manufacturers are very tough. They expect reductions in cost and pricing every year, And so that's one of the reasons we love the enthusiast space, the performance space. That is our focus. It is everything we do. And again, these are purchases of passion for our consumers. They don't go, it's not a guy just trying to repair or maintain a vehicle. It's somebody who's improving the performance of this vehicle that they love. And that allows us to make great margins, and we continue to invest a part of that to continually bring exciting new products, which we know is our consumers' number one purchase driver is exciting new products.
Yeah, well, actually, I found out, Mitch, that stock is not an option. It's all about personalization and customization. And,
Yes.
you were talking about your car earlier, and even thinking about it now, I see in your eyes, you're smiling, because it's like, this is fun. We all had that coming of age moment around a car. We kind of sat in one meeting one day and we said, all right, everybody, tell us when you first thought of a car. And everybody went through when they were 14, 12, 15, 16 years old in that first moment. And that stays with you for life. And that's not going to change.
Yeah, really, it's really interesting. And listening to you talk, Matt, one of the things, we're here on an investment program. And when we talk about stock, we're not talking about shares of stock. We're talking about leaving a car the way it came from the factory. Our consumers don't feel like a car is theirs until they've modified it. So when we say stock is not an option, that's what we mean. Our consumers can't leave these cars alone. They've got to modify them.
I can't blame you. I mean, if you no modifications, I mean, how do you make it your own, right?
That's right.
And so that's what I would definitely say to that. I'd have to know at the end, Tom. I would love to know what was your first car, but we can get into that. We can get into that after. But
okay.
One of the trends that I'm seeing now, and I think you guys probably been seeing this now, is the rise in value for collectibles, and how you're starting to see also maybe, and mentioned in the chat here, there's going to be a lot of people trying to maybe fix some old cars, try to get these sales up. And so with that being said, are you guys seeing a trend also in the parts of, let's say, some older classic cars that are trending up? And then also a trend of people from apartments moving into the suburbs. They got garages now. So, right. A lot of that, I mean, hey, I used to love working on my car, but it's very hard to work on your car if you're like out on the street. You want a garage to be working on it. So let us know about some of those trends that you guys are seeing.
Sure. So, one of the interesting things we're seeing, well, first, let me say we're about almost 50-50 between classic cars and trucks and then modern and late model trucks. And, there are just a lot of, we follow so many different platforms. But one of the big trends we're seeing is pickup trucks. People love old, classic pickup trucks. So that's certainly an area for growth. And, you mentioned Fox bodies. Fox bodies are huge. The GM G bodies. So, they made so many of them. They're, front engine, rear wheel drive. A lot of them came with V8s. Even if not, it's easy to put a V8 in them. So that would be another trend. And, we talked about LS Fest earlier. One of the trends we see, and we make a lot of products to support this, and that is consumers converting everything that you can imagine to the GM LS engine platform. And, when I say everything, we're talking, not only vintage cars, whether it's Chevy, Ford, Dodge, Volkswagens, even, late model vehicles, BMWs, Japanese cars. The drift guys really love the torque of the LS engine. Really allows them to get into a great drift and make lots of noise. So that's another one of the trends. So I could probably go on longer than we have. So I'll pause there.
Tom, what about the hearse we saw on the drag strip?
Oh yeah, absolutely. So at LS Fest West, there was a hearse, that they take people to the graveyard in, that was all highly modified tube frame chassis. And it was running something like 160 plus miles an hour in the quarter mile.
169.
Yeah. Yep. very, very fast.
It probably was from Count Customs, that guy in Las Vegas.
Yeah.
All right, Chris. I think Chris is going to wrap us up, mention some comments here, definitely from the chat. But before then, I mean, Tom, I had to ask that question. What was your first car?
So my very first car, and you got to keep in mind that I was 13 years old, so I couldn't go out and buy any car I wanted. But it was a 1964 Chevy Impala. And my second car was a 1965 Chevy Impala Super Sport. And, it's just been a passion that's followed me throughout the course of my lifetime. And I have my cars may be a little better today than those, but they were and even today are exciting to me.
We'll let you slide with that one, seeing as we're from Detroit here, us Ford fans.
There you go. Hey, I'm a big Mustang fan. I've got a lot of Mustangs today.
Got to.
Including Fox bodies.
Yeah, I'll
Those are the
follow
fun
up
ones.
with the Ford versus GM here. My first car was a Chevy Cavalier in 97. My grandpa worked for General Motors for over 30 years. We were a loyal GM family for many, many years. So had to have a Chevy as my first vehicle. I think it was also my second, third, and fourth vehicle as well. So, Tom and Matthew, we loved this interview. The chat loved it. You got lots of loyal fans out there. I'll say that. There's lots of people, excited, about this company going public and just your company in general. So, I want to thank both of you. Again, guys, we have Tom Tomlinson, the president and CEO of Holley, and Matthew Rubel, the CEO of Empower. So the company is going public in a SPAC merger. That ticker is EMPW. Thank you so much, gentlemen, for taking time out of your busy schedule for joining us on the show today.
Thank you, guys. It's been our pleasure.
Okay.
Thank you, guys.
Thank you.
Bye. Thanks.
All right, guys. As you guys heard, another one done here. And I don't know about you guys, but I wish I could drive this car behind me. I would take it for a spin right now. They'd probably lose me at Benzinga for the rest of the day, but I'm going to be looking at this company to see what happens in the next couple of months. One of the companies that I can go ahead and let's shift them into the long-term basket and see how the revenues produce in the next couple of years. And maybe it's one that you put in your bag. Like I mentioned, I think, collectibles are going to continue moving up. And we're seeing the collectibles market keep moving. So maybe because of that, they even get a spark in their sales there.
Yeah, and someone mentioned it in the chat, right? We're seeing a shortage of used cars out there, right? So what could that mean? And you hit on some trends too, Mitch, moving to the, having garages, being able to work on your cars. If there's not as many used cars out there, you're more likely to, keep the car you have, but why not, spend some money, add some performance to it. People collecting old cars, there's a market there. You can, increase the value of them with some of this performance as well. The keys for me here, guys, we talk all the time about SPACs, right? That are a couple years away from revenue, a couple years away from profitability. Here you have another example of a company going public that has real revenue, growing revenue, and profitability. So for anyone who says, that it's just these, these non-revenue, non-profitable companies going public with SPACs, this is another example here. Holley, a decades-old company, choosing the SPAC route to go public, right? And I think that's a testament to, SPAC still being a valuable way to hit the public market. And Mitch, that electric vehicle talk, what a key thing to kind of set them apart from some of the competition that they're looking at, electric vehicles. I mean, he even said Tesla, right? Like they're working on performance for electric vehicles. So they see the finish line ahead, and they're going to get there.
Yeah, one of the things I think this company does really great, and we're showing them now, is their events. They have an event coming up here, guys, the Ford Fest. Definitely check it out, guys. I think they do great on their social aspect, like you mentioned. You talked a lot about that, how they've been focusing on that aspect and how that could really be kind of a driver as a scene kind of, car enthusiasts. They look all the time for blogs and kind of to learn about vehicles and learn more. And that's how you see their website actually bring in the blogs next to their parts. I like how they're doing that. They're trying to mix in so that you could find articles that you like. And then next thing you know, you're reading an article, but you were looking for a part, or you were looking for a part, or you were reading an article, and next thing you know, you're looking for a part. I like that little mix. It creates what we call Benzinga, our ecosystem. And the ecosystem, you can tell they're trying to really combine all the different kind of elements there is in vehicles, whether it be events, whether it be kind of just reading blogs, reading how to do stuff. Like right here, how does a dual sync distributor work, and when do I need one? Those kind of articles are going to be read. I can tell you that, guys. And their SEO, like he said, he's focusing on SEO. So why? So they can show up on the rankings on Google. So like when you search, hey, I need a car part or a car auto part, or how does a dual sync distributor work? Guess what? You just might see this article be one of the top ones to pop up.
Yeah, they had that whole slide, right, on social media and, SEO. And that's a key, right? Because this is a legacy company that's been in, that niche market of, performance auto parts, but they're also growing because the market is growing. As I said, you're seeing more millennials, more Gen Z, getting into performance auto, and they're going to be able to capture that, by using social media and what Mitch just said, integrating that into their website. So, again, a company with revenue and profits looking good long term.
All right, guys, before I end, it wouldn't be Money Mitch if he didn't give a little mute there. So, all right, let's keep going. Let's get into, guys, the movers of the day, Let's see what's moving out there. What do we like right now? Fast is leading, man. Fast is starting to get a lead.
Yeah,
we got that, Chris.
We got FST leading today. This is a surprising one. Remember, I said the news yesterday was that those restaurants are going to accept crypto as payment. So, how much of a needle mover is that going to be for revenue, or is this just people buying on the headline? But this is a potential reopening play, right? They're casual dining restaurants that have been closed or have been limited in capacity. So this one, after the deal is approved, it could real quick become a reopening play.
All right, guys, let's move on here. Of course, Hillion still looking decent here, guys. It's starting to get above that trend line that we drew. Let me see that 1 day chart so I can show you guys that look. Let's see if we can get above this and start holding, guys. I've drawn this line. I've drew it. Look how we started above it today. Let's see if we can close above this high that we had on the 27th, guys. That's going to be very important. The high there is 1099. I would love to see it close over 11 today. That's how I'd see it keep looking strong there.
Yeah, it's still surprising to me that, Hyliion got all the way down to 8, but it looks like it's coming back here. So a nice movement again today. Looks like maybe we can break that $11 level again. I see Clover moving, CLOV. Like I said, those earnings on May 17th, I think that's going to be a big catalyst. You could see this one go, either way. Either, it gets the support because they have some new deals or new numbers to announce, or it could, tank because their guidance gets cut again. So, Clover definitely, has an exciting May ahead one way or another.
So one trend that I've been pointing out, guys, is that big volume bar buildup, right? And that's what you kind of need to see a big move. Here you guys are seeing that big volume bar buildup in IGAC. Yet we're not having a crazy day today, but that pile in, that's no small little pile in, guys. That's compared to the volume, you're talking about almost 7 times or 10 times the volume that's been in this one. IGAC, someone's trying to get sneaky there. What's up with this, Chris, before we get on out of here?
Perfect, Mitch. Let's talk about this one tomorrow. This is actually going to be an options play idea that I have for you guys. So full disclosure,
Stay tuned.
I am now long options on IGAC, and I'm loving the volume, Mitch. I'm loving that $10 level. And we saw the deal get done for SEAH. I think IGAC lands a sports betting deal as well. And it looks like based on the volume, maybe a deal is coming soon. But let's talk tomorrow on some ways to place options on some of these SPACs, because that's what I'm doing here with IGAC is playing the options.
Like always, guys, we're going to keep going through it. Check it out tomorrow, guys. The SPAC option play by Chris going to be mentioned. Definitely stay tuned for that. Like always, guys, we're going to keep going through. We have some more interviews like we always do. We're going to keep doing bigger and bigger interviews. I've heard some big names really being mentioned in the back by Chris and Zoltan working hard. So you guys stay tuned. Stick with us on the SPAC Attack. You guys already know. And Chris, anything else before we get on out?
We got some huge names coming up, guys. You don't want to miss these. You know, another interview today, and we have an interview tomorrow as well. That ticker is GLEO Shapeways, which ARK Funds just bought 500,000 shares in. So find out tomorrow all about this company that Kathy Wood is loving.
All right, guys. And tomorrow, guys, we'll be giving out the reward there for our giveaway. There. Just want to go ahead and put the link here for you guys that haven't entered all week. Maybe we got some new people here. I'm going to go ahead and throw the link in here. Definitely, guys, get your chance here to win before we get on out of here. Have your chance to win. There's the link, guys. And I'll give you a little secret. The code is Derby. Get it done, guys. Get it done. And we'll see you guys tomorrow on the SPACs Attack.
Thanks, everyone.